Good afternoon, esteemed guests and participants from around the globe. On behalf of the Sustainability Reporting Standards Board, we welcome you to our webinar on Mastering BRSR Core Key Insights for Sustainable Practices, organized by SRSB of ICI. We are privileged to host this webinar today. Now we would like to request CA Krati Mittal from Haldwani branch of CIRC of ICI to introduce our chairperson, CA Priya Kumarji. Over to you, ma'am.
Thank you so much. Good afternoon, everyone, and thank you, SRSB team, for giving me this opportunity. Proceeding, our chairperson, CA Priya Kumarji, is a Central Council member of ICI and chairperson of the SRSB. She is the director of the Institute of Social Auditors of India and vice chairperson of ICI's Corporate Laws and Corporate Governance Committee. As a registered insolvency practitioner, she leads corporate restructuring and has significantly contributed to drafting the Bankruptcy and Insolvency Code. A seasoned faculty member, she has delivered over 300 lectures, enhancing professional skills in various ICI committees. We welcome you, ma'am, and would request you to please address the participants.
So thank you very, very much. On behalf of the Sustainability Reporting Standards Board of ICI, I take great pleasure in extending a very, very warm and a very hearty welcome to this webinar on Mastering BRSR Core. My thanks are in order to the office for enabling this program led by Shweta Goel and her team. I'm also very, very thankful to the event enablers of today, which is Krati Mittal and Harshin Anand from the Haldwani branch of ICI. These webinars and the event enablers for these webinars are an attempt by ICAI to actually popularize this much needed theme of people coming forward and speaking on public platforms, one, and B, also to be part of the technical subjects that are being discussed. And in that context, I'm sure BRSR holds or would hold significant potential for members in branches which are as important or as well known as Bangalore, to the lesser important branches such as Haldwani, because I think there's a very large MSME presence all over the country. Now, coming to this concept of BRSR, I'll just do a short recap for about 5 minutes on what we've done in the earlier webinars. So there is this concept of ESG reporting, which is new in India in the form of BRSR Core. But we have the top listed companies which are already kind of presenting what is called as integrated reporting on a voluntary basis. Now, what does ESG stands for? It stands for environment, sustainability, and governance. At a time when corporate boardrooms were only dominated by themes revolving around governance and finance and profits, the discourse and dialogue the world over has moved to people, planet, prosperity, and embracing this entire concept of working together and the world being a one large universe that we live in, and which is sort of truly exemplified by the popular slogan of late, which is Vasudhaiva Kutumbakam, which is all the world is my family. And it's in that league that all enterprises across the globe are progressing. The primary objective being we should deliver a planet that we inherited or a better planet to our succeeding generations. See, in all this, what's very important is each of us is a speck in this universe. The times that we live in, even if you're talking about the century of 2000 or the century of 1999, it's a speck in the period of time that the universe has seen and witnessed in terms of changes. And it's one of those goosebump moments when you actually think about it, because the world will carry on, the universe will carry on with or without us. But having said that, I think the mankind is supposed to last for quite a while now, and it's very important that we deliver a better planet to our succeeding generations. So it's in this context that everybody the world over realizes that the carbon dioxide emissions harm the atmosphere. And it's this grand cycle that happens, The smaller organisms are eaten by the larger organisms. The smaller organisms feed on the biological and the plants and animals, and it's an entire ecosystem that gets created. And when man, in this path of progress, attempts to hurt this ecosystem, the entire chain is disrupted. You have famines, droughts, glaciers melting, and a whole lot of things that happen. So it's in that context that we've had several conventions the world over. The United Nations leads the movement for controlling climate change and enabling a better future. So if you narrow all this to the context of India, today, no dialogue on sustainability is complete without the corporate participation. The corporates are the major emitters of carbon dioxide. What they produce is what we consume. So it becomes very important to understand and control what the corporates emit. And ESG reporting is one such framework that's developed to ensure that there is a complete corporate consciousness on how we deal with environment, how we deal with the society. How do we become a more inclusive society? Do we need more women leaders? Do we need more people who are disabled to become part of the mainstream corporate functioning? And governance, of course, which is a theme as timeless as the world itself. How are corporations run? How are they managed? How do they return for their stakeholders? How do they return for the various capitals that they deploy, which is the human capital, the social capital, the intellectual capital, the financial capital, everything. So it's in that context that BRSR was introduced in India. It's mandated for the top 1,000 listed companies. And this year, the BRSR also includes a subset, which is called as the BRSR core. In the previous webinars, we've gone through these various aspects of BRSR. What are the three main sections and how they kind of fold into the principles? And we had detailed elaboration on each of these principles. And the board will be very pleased to put out a brochure at the earliest, indicating a link to all these programs that we've conducted, so that you can kind of pick up on this very fast. And today we're going to talk primarily about BRSR core. Now, the world over, there are principles by which you function. So the entire aspect of sustainability is aligned to something called as the UNDP goals. And in India, those 16 UNDP goals became the 9 principles of the national guidelines for responsible business conduct. So if you see our entire BRSR reporting, they are aligned to these 9 principles. One of the principles being a sustainable environment. Now the BRSR core, which is a subset of BRSR, again relies on these 9 principles. So what can you control? You can only control what you know, and you can only control what you understand. And how do you function? You function by a set of principles. So if you're a chartered accountant, you function by the principles of independence, competence, professional competence, integrity, skepticism, etc. Similarly, when it comes to ESG or BRSR reporting, the BRSR reporting aligns itself to principles. Principles that provide for a safer, sustainable, and a happier planet with peaceful coexistence. With these few words, I'd also like to place on record the appreciation of presence of the Vice Chairman of the Sustainability Reporting Standards Board, Anuj Goyalji, who's here with us today. And he's been very supportive of the initiatives of the board and very, very happy to, be around with him. And he's also the chair of perhaps the most important committee, which is the Ethical Standards Board. And he also chairs a very special committee created this year, which is the Professional Skills Enrichment Committee, for which I happen to be the vice chair. And this introductory address would be very, very incomplete without recognizing the presence of our speaker this day. And of course, I'm sure Krati will actually read out his profile. But before that, I must hasten to add that I'm very thankful to Anuj for introducing Ankit to the board. He's a special invitee on the SRSP board, and his contribution to the various papers that we are supposed to report on and in framing our own contents for the BRSR certificate course, etc., has been incalculably valuable. Thank you so much, Ankit, for being here, and thank you, Anuj. Thanks.
Thank you so much, ma'am, for your inspiring address and for establishing a solid framework for our discussions today. Your insightful vision and motivating words have created an optimistic atmosphere for our webinar. We deeply appreciate your dedication to promoting sustainable practices within our profession.
Thank you, ma'am. Now we would like to request you to introduce our Vice Chairman of the Board, CA Dr. Anuj Goyalji, ma'am.
Our Vice Chairman of SRSB, CA Dr. Anuj Goyalji, has been an influential figure in the accounting and finance community, serving as a Central Council member of ICI and as chairman of multiple high-profile committees, including the Ethical Standards Board and the Professional Skills Enrichment Committee. His leadership extends to the publication and CDS Directorate and his past roles as chairman at the Ghaziabad chapter of ICSI and ICMA. With over 30 years of distinguished service, including 17 years on the Central Council, his contributions have been pivotal in shaping the profession. Dr. Goyal is renowned not only for his extensive experience, but also for his work as editor-in-chief and editor of various publications of professional interest. We welcome you, sir, and would request you to please address the participants.
Thank you very much, Krati Mittalji, our honorable event enabler. And we are having the presence of our honorable resource person, C. Ankit Maheshwari sir, who is a very, very prominent chartered accountant and is helping out the Institute of Chartered Accountants of India and various committees, including Professional Skill Management Committee and Sustainability Reporting Standard Board in a great way. Harsin Anandji, our honorable event enabler. And of course, we are having the presence of our secretary of Sustainability Reporting Standard Board, Sweta Goyal ma'am, and of Manish Goyalji, our chartered accountant and senior officer of the Sustainability Reporting Standard Boards, Chandran ma'am, and all other respected officers and chartered accountants who are present here today from Sustainability Reporting Standard Board, and all the respected friends under the leadership of Sri Priya ma'am. The way Sustainability Reporting Standard Board is doing wonders, I think something really great. So once again, a very, very big round of applause to our honorable chairperson, Sri Priya ma'am, who is really doing wonders for the cause of the profession and for the cause of the society, and in turn for the nation. And ultimately, our vision is to see that how we can make this planet a better place to live for our future generations, and with the help and support of all the members of the Institute of Chartered Accountants of India. And I welcome all our honorable delegates from each and every part of the country and outside country who are live with us in large numbers. And today, of course, we are going to discuss mastering BRSR code, key insights for sustainable practices. And I think we are having the best of the resource person, C. Ankit Maheshwari from Pink City of the country, Jaipur. And friends, in recent years, we have witnessed that the importance of environmental, social, and governance ESG practices has gained tremendous momentum globally. As businesses navigate, now we can view Sri Priya ma'am, as business navigate the complexities of the modern world, transparency and accountability in ESG practices have become crucial. And today, more than ever, stakeholders demand clear and reliable disclosures that reflect an organization's commitment to sustainability. We have witnessed, I think yesterday only, we were witnessing that in China, the rainfall of whole of the year, that rainfall was there in a single day. And when you will be going against nature, I think it would be very difficult to control the nature. Nature can't be controlled. Nature means nature. Nature is not supposed to be controlled, and when you will be going to control the nature, then you will we should be ready. The mankind should be ready for the disasters like the disasters which are happening in China. So under the leadership of Sri Priyaji, we are trying our level best with the help of all the respected chartered accountants, that how we can try to see that each and every corporate businesses can try for a more sustainable planet, more sustainable world, more sustainable country to live for the better place to live for the future generations of the country. And the Security and Exchange Board of India introduced the Business Responsibility and Sustainability Reporting (BRS) framework, and the BRSR code, a more streamlined and focused framework, is designed specifically for listed companies to enhance their sustainability reporting. And this initiative signifies a major step forward in aligning Indian businesses with global best practices in ESG. We will guide you through understanding the specific requirements of the BRSR code and their effective integration into your organization's sustainability reporting. And we are having the best of the resource persons told by Sri Priya ma'am, also Ankit Maheshwari, and of course our enablers, Kirati Mittalji from the Haldwani branch of the Institute of Chartered Accountants of India, and C. Singh Paul ji, our honorable event enabler, the leader of the profession from Haldwani branch of ICI. So a very, very big round of applause for Sri Priya ma'am, Ankit ji, and our leaders of the profession from Haldwani, Kirati Mittal ji and Harsin Kaur ji. You can witness that amongst the 4 leaders, among the 5 leaders, we are having 4 girls. So we are moving towards more sustainable future, because if the things will be in the control of the girls, of course, you can very well, we can very well, I think, ensure that this earth will be a better place to live for the future generations to come. So we have to give the leadership to the best of the professionals. The girls can really do wonders as far as our accounting profession is concerned, as far as BRSR is concerned. And we encourage participants to actively engage with our speaker throughout the session and leverage the opportunity to gain valuable insights into BRSR code. Thank you all for joining. Let's work together to make credible, sustainable reporting a cornerstone of corporate responsibility and drive meaningful change towards a sustainable future. So I once again welcome all our viewers who are with us from each and every part of the world in large numbers. And with the help and support of all of you, under the leadership of Sri Priya ma'am, we will certainly come up to the expectations of the Institute of Chartered Accountants of India, of the expectations of the regulators, of the expectations of the government, and of course the mankind. The expectations of the mankind are immense from the best of the accounting professionals, the members of the Institute of Chartered Accountants of India. Thank you very much.
Thank you so much, sir.
Thank you.
Thank you so much, sir, for your enlightening address. Your
Sunil ji
deep
want to say something.
insights.
1 minute.
Kirati, yeah.
I had one very interesting insight, which I think I should share with the audience, sir. So when the whole world is talking about, percentages reserved and things like that, CA is possibly the course where 30% are women, chartered accountants today. And it's very nice. We've come through a system of meritocracy, and 40% of our students are women. And I think this is a history moment for us. We had the Chennai convocation recently for Tamil Nadu and Kerala. And for the first time, the number of women exceeded the number of men convocating. It was more than 50%. So it was a very different kind of moment out of 850.
And you see, the chairperson is Sri Priya ma'am. Secretary is Smita Goyal.
I think it's the...
And event enablers are Kirati Mittal and Harsin Anand. So I think we are witnessing the same thing everywhere in our institute also, in our sustainability reporting standard board also, in our VCMs also. So we are going our head towards you.
It's very nice.
And,
I was just going to, I was just highlighting that there is, in a system of meritocracy, I think maybe it takes time, but then the women do take over. And I think it's an equal world. And it's actually thanks to the men who make it possible. It's all the fathers, the sons, the brothers who supported this. So thank you very, very much, sir. And it's over to the MC again. Thank you.
Thank you so much for your nice words for us. Thank you so much. And thank you so much, sir, for your enlightening address. Your deep insights and unwavering commitment have been provided with invaluable guidance. Your leadership continues to inspire us, and we are fortunate to have you as Vice Chairman of SRSB. Thank you, sir.
Thank you very much.
Thank you, ma'am. Thank you, sir. Thanks a lot. We will be now moving on to our technical session of today, which promises to be equally enriching and focusing on the core concept and requirement of the BRSR code, empowering participants to navigate the critical aspects of sustainability reporting effectively. Now we request CA Harsheen Kaur ma'am to introduce our speaker of today's session. Over to you, Harsheen ma'am.
Thank you. Good afternoon, everyone. It is my pleasure to get CA Ankit Maheshwari ji introduced to you all present here. CA Ankit Maheshwari ji is a dynamic chartered accountant with over 15 years of experience across various geographies, an expert in integrated reporting and BRSR frameworks for large listed companies in India. He is a special invitee to SRSB and head technical reviewer of research committees. Ankit ji has authored publications on financial reporting practices and actively advises on government initiatives in Rajasthan. His research and mentorship have significantly impacted the finance and accounting industry. So I would request CA Ankit ji for fostering the deeper understanding on today's topic. It would be a pleasure for us. Please, sir.
Thank you so much, Harsheen. It is indeed a pleasure. I am here because of, two torchbearers in this council who happens to be a great mentors, great friends, great support system in which I operate. Let me place my sincere thanks to Chairman SRSB, CA Shri Priya Kumar, and indeed she is instrumental in bringing so many changes into sustainability reporting standard board. Together, I had a great experience. I hardly know her since last 40-50 days, but it has been a great experience working with her, working in her leadership. She giving an opportunity for deliberating on all those papers and making even the resource persons learn a lot. But I'll tell you, I'll just give you a 1-minute brief. She has been deliberating an integration of IFRS S1 and S2 at the level of regulator with BRSR. There are certain changes which were deliberated in terms of BRSR core, which was in respect of assurance, value chain partners, and everything. Again, SRSB represented extremely well into that deliberation. We are in process of formulation of ED 5000, which is an assurance standard post SSAE 3000, 3410. Again, ma'am has an incredible contribution. And I must say that, I am a diehard fan of yours and I'm just learning every day. Every day I'm learning. So thank you so much.
Just a small thing, Ankit. Maybe you should move a little away from the screen because,
Okay.
and put your, laptop a little towards yourself, the screen.
Does it get better?
A little more. No, I mean, just push your screen in front of you so that we can see more of you. Yeah, exactly.
Okay.
Perfect.
Thank you. Let me also place my thanks to the Vice Chairman of SRSB, CA Dr. Anuj Goel ji. His contribution to the council has been phenomenal. It is like a journey of more than 20-25 years in the council and maybe a journey of over 30 years with the institute. The kind of leadership he has indicated is again phenomenal, and with all busy schedules, both of them being here and in this webinar obviously makes it so essential that we understand what exactly is happening from regulatory point of view in BRSR framework. So there's a lot to deliberate. There's a lot to deliberate on it, and we will begin with this session at a very faster pace because we are left with exactly 90 minutes from here, and there's a lot to cover into it. So let's set up the expectations. So there are 3-4 expectations in terms of this session. One is the journey and the evolution of BRSR core. The other is the assurance on BRSR core. The third is how do we, in India, how the regulatory framework is operating. So I'll straight away take you to the July 12, 2023 notification of SEBI, which mandates for BRSR core, and let's try to understand what is happening at regulatory level. I think the chairman SRSB set up a great tone, right? Uh, in terms of India adopting BRSR, India has very smartly looked into what GRI prescribes, what CDB prescribes, for which there is a guideline from National Stock Exchange coming up, which actually tells you which parameter is linked to which global framework. India is one of very few countries having a formalized framework of ESG reporting. Still, a lot of part in the Western countries are reporting it in an informal or in a casual way or in the form of a ESG report. We have a extremely structured format which not only aligns to the global frameworks, but which also aligns to the needs of the India based on the Paris Convention we had. Uh, Also, we should understand what is the role of chartered accountants into this entire framework. Some people might be new to this. BRSR core, as the name itself suggests, is very deep of what exactly BRSR is. We'll go into the technical part of it, but I'll tell you what role chartered accountants should see into this is extremely important. So I I think from uh, regulatory point of view, this entire sustainability has multiple standard setters. GRI, like I was talking about, CDP we were talking about. Similarly, the internationally we have ISSB, International Sustainability Standard Board, which turns out to be a standard setter. And ISSB has been um, acquired, or I would say has been merged by IFRS Foundation, which means that now internationally sustainability board will be spearheaded by IFRS Foundation, which is a financial reporting standard setter, which means that IFRS will now not only set up financial standards, but will also set up non-financial standards. And that is why you see S1 and S2, coming in place. Now, that is why I feel IFRS has a history of rolling out standards across the globe. Today, if we are on Ind AS as chartered accountants, I think IFRS or IASB had a lot more role into it in India adopting, or I would say India converging to Ind AS. So in similar way, because now this ISSB is the spearheading agency, I sense majorly the role will align to the finance professionals, and professionals who have been exercising skills in finance will also have to now exercise lot more skills in non-financial parameters of reporting. And that is why I, when we opened up this session, I was talking about alignment of IFRS S1 and S2 with our BRSR. That's another agenda which regulator has taken up. So lot to discuss, but one thing which is very clear, that globally the entire ISSB is now aligned to the financial reporting standard setter, which means that there's a lot of work to do. And in fact, when you look at the draft of the S2, there's a lot of financial implications which needs to be done. I'll just take a break of a second. Sorry. So India conventionally was preparing a BRR report. This was India's, a business responsibility report. And then under Ministry of Corporate Affairs, I'll go more into, I would say, a bird's eye view of how it is coming up, so that we understand what exactly BRSR core is and why are we so importantly discussing about BRSR core. So conventionally, India was on BRR, and companies used to place their BRR on their investor relationship sections. If you recall, that was the convention. In 2017-18, we had this national guideline of responsible business conduct coming up under Ministry of Corporate Affairs, where this entire national guidelines of responsible business conduct started looking into the alignment of United Nations Sustainability Development Goals in the business practices of India. while they deeply evaluated it, they came out with a framework which is called the BRSR framework. In initial years, this framework was voluntary, and companies were, instead of preparing BRR, were expected to prepare BRSR on a voluntary basis. As we stand today, top 1,000 companies in India are adopting this on a mandatory basis in terms of market capitalization. And we see a very regulated framework coming up. Almost, I would say more than 100 companies have come out with their BRSR reports as we stand on 19th July. And I have been evaluating all these reports very thoroughly and realized that, there are still a lot of gaps and a lot of clarity which regulator needs to give to us. So we take it forward from here, and we go on the circular which came for BRSR. But I hope today we are clear that top 1,000 companies in India are actually adopting mandatorily a BRSR framework. In this is embedded BRSR core. As the name suggests, there are some core KPIs which this circular intends to define, which needs to be captured in BRSR. Before I move to the circular, I would again, place my thanks to event enablers. I missed in my opening remarks that both the event enablers who are the moderators of the session also, I'll require your help, Harsheen and Krati, in this entire session to make it extremely interactive. And let's try to, add a lot of value in next 60, 70 minutes to our learned audience. Hopefully we three people will pull it off very well. I straight away go to the circular, and I'm sharing the screen. Just let me know, whether it's visible or not. So
Yes, sir.
here is the circular which came on 12th July 2023, which talks about BRSR core framework for assurance and ESG disclosures for value chain. So this says that please read 3.1. This says that BRSR core and updated BRSR. BRSR core is a subset of BRSR consisting a set of KPIs, metrics under 9 ESG attributes. This is important in context of India, and this is an emerging market. We will discuss what are these 9 KPIs. They define them in Annexure 1. We will read Annexure 1, but let's go to, there are some 9 KPIs, basic understanding for all those who come from, basic understanding of BRSR. There are some 9 additional parameters which they have embedded in BRSR, and they say we want a global comparability of intensity ratios. So India has to play very smart here, because a lot of people are eyeing into how India is being developed, right? So let's go to the background of how the world has evolved, because this is important. What here it is written, I am reading para 3.1, that further for better global compatibility intensity ratios based on revenue, adjusted for purchasing power parity has been included. And this was something which was a point of discussion in all corporates as to what should be the PPP index we should take and what exactly a PPP index is. But let me go to a background. So what has really happened is that the Western world in early 19th century has evolved very well. And when I say they have evolved very well, I would say there was an industrial revolution happening across globe. Nobody was discussing carbon emissions at that point in time, or how much we are disturbing the nature. Nobody was actually deliberating across it. As we moved ahead, US got an opportunity to develop the IT revolution and the information technology space going on. When the Eastern world starts developing, including India, we see that the Western world starts putting a lot of imposition or a lot of regulation on these developing countries to reduce carbon emissions. I must state it on record that India still only occupies 4-5% of the carbon space across the globe. So to develop a country, naturally, there will be certain set of emissions which you have to do. But how do you counter them? How do you control them? Is what this report gives you an idea of. So my point here is also SEBI took an initiative that we should look into a comparability of what Indian companies emitting. So even if you accumulate all the parameters of sustainability, say energy, water, waste, right, and especially the energy, even energy, water, waste, right, and you said this is the water we have emitted or we have wasted, this is the energy we have consumed, but there has to be some comparison between an Indian company consuming this energy and a Western or any other country company consuming this energy, for which this has to be calculated on a purchasing power parity index. This index is published by IMF also. This index is published by some other, by World Bank also. And you realize that this year's index, I would say, is 20.22 with respect to, rather not this year, 2023 indexes pertaining to 20.22, which means that $1 is to 20.22 is what India has to look into. A little technical when we go into it, but the idea broadly why we are comparing all these ratios to PPP, which has been introduced here, is because of the fact that we want a global comparability. That's what SEBI says it. Annexure 1 talks about all those 9 parameters. We will deliberate in detail and how do you get an assurance on those 9 parameters. But it also talks about the BRSR format after incorporating new KPIs of BRSR core, which are placed in Annexure 2. We'll read the exactly what law has to say on BRSR. But that's one thing. So one key thing, there are 9 attributes which constitutes the BRSR core. These 9 attributes needs to be assured also. Now, the second thing which it talks about is the glide path. It talks about how Indian companies are undertaking or should undertake assurance also. So you see from financial year 23-24, top 1000 listed companies shall make disclosures as per updated BRSR format. This is number 1. Number 2, it says that listed companies are also expected to take an assurance. India, instead of going for a limited assurance, India has gone ahead one step, and Indian companies will undertake a reasonable assurance mandate. In this session, I will also discuss what is the difference between limited assurance and reasonable assurance. But reasonable assurance strengthens the stakeholder more than what limited assurance is actually doing. Now, the glide path says that for 2023-24, we have top 150 companies. So we might, if the time permits, we might go ahead discussing these, any BRSR report on which a reasonable assurance is being taken, maybe a real case study in our hand. But eventually by 26-27, all the 1,000 companies which are under the ambit of BRSR will be expected to prepare a BRSR report with BRSR core and an assurance over these 9 KPIs is what India is looking at. So that's the applicability. I sense by the time we move in 2026-27, there might be more than 1,000 companies coming under this ambit. So there is a lot to do on this front. But I hope with regard to applicability, if there is any confusion, please post it in your chat box. Requesting event enablers, whatever questions you have, just put up in the chat box, or you can ask on behalf of them, so that we make it more interactive instead of just one-way kind of a communication. So we look at a glide path, and we are expecting that now we are in financial year 23-24 is concluded. 150 companies have come with a reasonable assurance. There's an interesting way to do an assurance. So on the 9 KPIs, when you see majority of the assurance report this year, on these 9 KPIs, people have taken a mandatory assurance. On other KPIs which are not the part of BRSR core, companies have taken assurance on select non-financial parameters in a limited assurance way also. So two things have been covered. One, this BRSR core is a subset of BRSR. It has 9 KPIs which are yet to be displayed on the screen. Two, the applicability and the glide path is very clear. And now this year we will see top 250 companies disclosing it. Third, this talks about the value chain partners, right? This entire circular talks about the value chain partners, right? And it talks about that whatever value chain we have, that is the upstream, downstream, we have to report the emissions for 75% of the value chain partners. This is very important in terms of data capturing, because things are moving very fast. We understand one thing: India just adopted a voluntary mandate. In the very next year, India, or maybe an alternate year, India decided to take a mandatory mandate. In the very first year of its mandate, India is saying that we have to report for our value chain partners. The value chain partners can be a small, micro, and medium enterprise also, and cumulatively they are expecting India to report 75% of the purchases and 75% of the sales. So if I'm a large company and say you are my value chain partner, right? So I have to report emissions of yours also, consolidating in this BRSR report. However, there is a lot of ambiguity regarding the double accounting, because you might be a value chain partner not only to me, but maybe 3-4 more companies, and all the 4 companies reporting this, the double counting of emissions is what we have to look into. But it talks about something very serious, for which I think as professionals we have to really gear up our clients to implement these systems on their value chain partners. As of now, currently, even my own company is not mature enough. Technically we call this term as SRMM. I don't know whether you have heard about it or not. This is called Sustainability Reporting Maturity Model. And as advisors, trusted advisors, or maybe if you are coming from the corporate side, then you have to look into this very strongly and start doing a SRMM across at least your top value chain partners. SRSB has strongly represented, because 75% of value chain partner is too much. SRSB has strongly represented that we should only cover 2% upstream and downstream in terms of value, so that it becomes doable, right? Because capturing emissions from your value chain partner will be very difficult. You will require to establish not only tool systems but regular vendor audits to capture these KPIs. But this is something which is a mandate, and this is something which is a major problem. These top 10-15 companies, rest all, they are not on the trend of reporting their value chain partners to 75%. There's a very less reporting, even though because people, the preparers, still don't understand the gravity of it. I still see when this question is put up in BRSR, that how many value chain partners you are reporting, companies still writing it 100%. I genuinely doubt that, barring top 5, 10, 15 companies, this could be done. Also, as of now, we are asking a qualitative disclosure here, not too many quantitative disclosure. So companies are taking this liberty. A company thinks that I have put a information about a value chain partner in my supplier code of conduct, means that I am assessing it and I am reporting it. That's not what is actually happening. So, an area to discuss about, right? 4.2 says listed entities shall report the KPIs in BRSR core for their value chain to the extent it is attributable to the business with the value chain partner. So they said they shall report the KPIs in the BRSR code. That is the 9 KPIs. So now only qualitative disclosure will not suffice. You have to capture data points of these 9 emissions also. Here it says that this is applicable for top 250 listed companies on comply or explain basis from financial year 24-25, and again the information which you are capturing for your top 75% value chain partner needs to be assured in a limited way on comply or explain basis. So again, and then it says who could be an assurer provider, and that's a key question in everybody's chartered accountant's mind, that whether we fall into a category of an assurance provider or not. I must say that any practicing chartered accountant who is giving an assurance as per SSA 3000 and SSA 3410 can undertake an assurance under BRSR also. However, the word we use is that it is not profession agnostic, and thus you will see other assurance players also coming in this entire industry giving an assurance. But 3-4 things which are the takeaway of this circular, and then we move on the next annexure 2. I'll first give you a very quick overview of what exactly BRSR is. Then we move on BRSR core, and eventually we move on, the assurance mandate. So if you have any questions pertaining to this circular, please post it in the chat box. Else we will move on the next circular of rather in fact annexure 2. Concluding this was published on 12th July 2023. This talks about BRSR core, which is a subset of BRSR. Some 9 parameters which changes to annexure 2, and applicability of assurance mandate and a glide path to it. Capturing of how do you capture ESG disclosure of your value chain partners, and expectation is to capture as of now 75% upstream downstream, and eventually who shall be an assurance provider to this is what this entire circular talks. Lastly, the value chain partners shall also be assured on a limited assurance mandate from financial year 25-26. If you have any questions pertaining to it, I'll be more than happy to answer any question pertaining to this overview of BRSR course. Kriti and Harshneen, do we have any questions as of now?
Sir, I don't think so. You may please continue.
Okay. So we move ahead. And now I take you to this annexure 2. We will look into an overview of what exactly BRSR is. I'll also in next 15-20 minutes discuss the pain points of it. Just a minute. Right. We discussed the pain points of it, and evaluating 150 companies for the current year, whatever data is available in public, especially which has come out in terms of BRSR, I'll try to navigate you. So we have 3 sections in BRSR. Section A talks about general disclosure. Section B talks about management and process disclosure, and section C talks about principle-wise disclosure. As in the opening statement, Chairman SRSB told that this is aligned to the 17 United Nations principles, all the 9 principles. How these principles are interlinked with each SDG, I'll try to deliberate this. But first, the format talks about a general disclosure. As you can see on the screen itself, these are generic points, general disclosure points, right? I move on the first pain point of the general disclosure, which is the reporting boundary. And I think this is very important to understand. So law actually gives you, SEBI, the regulator gives you an option to report. So when you're preparing a BRSR, you have to decide the ambit. Are you reporting it on standalone basis or you are reporting it for your subsidiaries also? If you are reporting it on standalone basis, then are you able to cover all your operational sites, or you are able to cover your non-operational sites also? If you are not able to cover any non-operational site or any particular plant or any particular location, I think this needs to be well defined in your reporting boundary. The problem is that as of now, companies are, giving a standard statement of their reporting boundaries. Knowingly, they are still not in a process of capturing certain emissions or certain locations. So the first thing strategically, if you're preparing a BRSR core report, you need to define your reporting boundaries. We see maximum companies reporting it on standalone basis. There are rare companies, who are doing it on consolidated basis, at least in the large caps, which is fine because we are still in a process to develop a system of a parent company. Subsidiary will take time. But second, they say that consolidation is to be done on the basis of financial statement. But when you look at the GRI, CDP, NSE advisory, they say if you are not covering any offices, especially your non-operative offices, or especially your offices in which you are not doing a manufacturing facility, and if you are not capturing any emission, that has to also come into the reporting boundary. So this is pain area 1. Second, you see point number 14, they're talking about name of the assurance provider. So top 50 had to comment upon the type of assurance obtained. As I told you, if it is a mandatory assurance, right? Mandatory reasonable assurance, then you have to put the parameters here as to which all are the parameters in which you have taken a mandatory limited assurance, and there could be certain parameters in which you must have been taking a limited assurance on a voluntary basis also. So here you have to write whether you have taken a mandatory assurance or a limited assurance. Not a problem. I think rest is a very generic information in general disclosure. Important thing. So I see a major mistake here. In general disclosure, you see the number of locations. I am reading point 18. The number of locations where plant and or operations offices of the entities are situated. My question to you is, and I would want you to use your chat box, if in a reporting boundary, you are writing that you are reporting it on a standalone basis, and if you have a foreign subsidiary and that subsidiary has a plant, then that plant will be reported here or not. I am again repeating a question. If I am providing any detail of a standalone entity, but I have certain foreign operations through my foreign subsidiary, should I report here or not? Because in my reporting boundary, I have already mentioned that I am only reporting it on standalone basis. I give you a 30 minutes, 30 second, break to think about it, what I actually talked about, and also wanted to gauge as to, whether we are getting enough responses or are we in a one-way communication. Because majority of the companies are doing this mistake, and that is why I've put up this point here.
Yes, sir. We are getting the questions from the participants. We'll be posting it soon.
Okay. So I take it forward. By the time I receive the answers. So if you are reporting on standalone basis, kindly don't put up your international operations here. This indicates this is the information which is being captured from the regulator as to the total number of locations and the quantum of emissions these total number of locations are doing. So if you are reporting it on standalone operations, there is, unless you directly own a plant in a foreign location, then only you can put up a plant here, a number of plant here or number of offices here. If it is done through a subsidiary, that means you have wrongly written your reporting boundary. That means you are trying to report it on consolidated basis. So only the reporting boundary and the operations should be in synchronization. That's my uh, humble request, and that is why I gave a lot of thrust on reporting boundary. Then we move on, general information of employees, the details at the end of the financial year, permanent, other than permanent. SEBI has a clear advisory of what is a permanent employee, what is the other than permanent employee. Very doable things, easy things. They are asking the turnover rates of the employees, what is the attrition rate. Simple. I think they are simple things. Now comes, you have to disclose the relationships of holding subsidiary and associate companies. But if your reporting boundary is standalone, still you have to disclose your subsidiaries and associate companies here and the quantum of percentage of shares which you hold. Importantly, the last column which talks about, does the entity indicated at column A participate in business responsibility initiatives of the listed entity? I think here we have to, take a very clear view. In case you don't have systems and processes established at your international location or at your subsidiaries or associates, right? You have to mandatorily write it no. Unless you are capturing the data, that's where you will write it yes. Otherwise, this turns out to be no. Another problem which I see is the CSR details, and here it has been asked whether CSR is applicable. So if it is applicable, then you have to write the turnover and net worth. Companies are writing their current year's turnover and net worth. It is expected by the regulator that you put up your last year turnover and net worth, because the applicability of CSR is dependent on the turnover or net worth which you do in last year, preceding financial year. So the data which is expected to be put here is the preceding financial year data. Then we have, the transparency and disclosure requirements, and this is simple. This is the capturing of the complaints for each stakeholder, and this depends on how do you identify a stakeholder group. So ideally, BRSR expects that companies identify stakeholders based on communities, investors, shareholders, employees, workers, customer, value chain partners. You can see in this table, and others. So the point here is that, again, a commonly found mistake I see, because we were discussing in the beginning of the session also, I see, the stakeholder identification, the identification of material issues, the identification of risk and opportunities. This is done multiply by the companies for multiple kind of reports. So if you are putting up a stakeholder, if you are identifying a stakeholder, you identify it from the perspective of integrated report or the overall annual report, and all those stakeholders will come here also. So these are not the only stakeholders. There could be a case that your organization feels that it has a requirement to identify more stakeholders. This comes in the other. So please don't only, the point which I'm trying to make here is that your stakeholder, your materiality, and your risk and opportunities, wherever you are categorizing, please don't categorize it from only BRSR point of view. You have to look into the holistic idea of capturing an integrated report, and whatever stakeholders, risk and material issues you identify for all your integrated reports are as good as applicable for your BRSR report. Once you start correlating these stakeholders with, as stakeholders and its material issues with United Nations sustainability development goals. I think you get a lot of clarity there. So this is easy. And now I come on point 26, which I was just discussing, but we have uh, some questions coming up, and I would first want to take these questions before we move forward, right? So the first question which comes up is that how are investor expectations regarding BRSR disclosure evolving, and what are the implications of the company? I think we have a very relevant question. I would want to answer this. I think, see, I told you in the beginning only, it's an evolving framework, right? And India is transitioning at much more faster pace than it was actually anticipated. So this is my point one, which means that obviously investors has a great set of expectation, and it entirely depends on the industry you operate. So mining industry, their investors are more keen about their quarterly ESG reports, their annual ESG reports. But investors has a lot of expectations from these BRSR disclosures, and they are taking it very seriously. The reason why BRSR core is also implemented, because India wants to quantitatively capture data, and India wants to transparently also want to capture the data. There are instances, because the other part of the question says, and what are the implications for the company? So the other part of the question says that, are there any implications of any greenwashing? Are there any implications where companies are, amplifying their sustainability reports or amplifying their non-financial reports? So as of now, yes, this is eventually driven by SEBI LODR requirement. And you will see, as of now, I have not seen any cases of any penalties for greenwashing, but regulator is in a process to identify these instances. For example, we were discussing at, some of this regulatory issue at some level, wherein this company has taken some BRSR targets. So the targets which they define on energy, environment, and water, they have defined certain targets, and those targets does not correspond neither to the annual reporting targets which they are stating for ESG. So we have to be very careful into it, and there's a lot of expectation of investors. In fact, as we move towards integrated reporting, the integrated reporting is more centric to investor, whereas sustainability reporting is more centric to the regulator. So if you are preparing a BRSR, I think you are more preparing it from the regulatory perspective. However, if you are preparing an integrated reporting, this is entirely prepared from investor perspective. And these reports are somewhere correlated also, because when you talk about an integrated report, you talk about all those 6 capitals, right? Your manufacturing capital, financial capital, social and relationship capital, natural capital, human resource capital, and intellectual capital. So your social and relationship capital, your natural capital, your human resource capital, your intellectual capital, all these things you find that you have been reporting in your BRSR also. But this report, the integrated version, is prepared from stakeholders' perspective more. And there a stakeholder actually starts quantifying these off-balance sheet capitals. That means a stakeholder is very interested in knowing that how much L&D expense a company is making, what is its employee retention ratio vis-a-vis an employee retention ratio of a peer company. How much natural capital company is eroding vis-a-vis A company is eroding, vis-a-vis natural capital B company is eroding. So there's a lot of thrust placed on capturing off balance sheet capital and comparing them. Also, investor wants to know through a value creation model. So when you look into an integrated report, you see a value creation model. So investor is trying to know how each capital is contributing to the value creation in short, medium, and in long term. So short term is actually the outcome or the output The medium term is the outcome, and the impact which is coming on stakeholder comes through this value creation model. So just I went a little out of context, not sticking to BRSR, but investor expectations are there from these reports, and with integrated they become higher, because now an investor on the face of an annual report can see that what is the quantum of their off balance sheet capital. I move on the second question here. The second question is, what are the key challenges and opportunities for different industries in complying with BRSR code? So I am discussing, that is why I am discussing the framework. With this framework, wherever I sense a key challenge, I am discussing for that particular data point. Industry specific, NSE has given an advisory on all kinds of industries. Naturally, with different kind of industries, there will be different challenges. We can't go so subjective into it. I'll try to find out more objective answers to this question. But as we go, at least we can surely discuss the points where there is a lot of cloud cover or where there is lack of clarity. I'll try to deliberate those points in front of you. The third is assurance. We will discuss. We have a question: what are the key considerations for obtaining on BRSR code assurance disclosure? What are the challenges integrating ESG metrics into financial performance evaluation? I think two questions are important. So I take two questions which I feel are very important. One is, can you explain value chain meaning in detail with respect to BRSR core? So with respect to BRSR core, when we are capturing the value chain, we are capturing the purchases and the sales. In terms of purchases, we say upstream and downstream. In terms of purchases, we are trying to capture 75% of these purchases. Value chain means anybody is adding value to, in the entire chain in which you are operating. So this could be your purchaser also, and this input giver also, and this could be where you are providing your output. So idea is to capture your emissions of your top 75% purchasers, from where this, as an organization, you are purchasing, and top 75% where you are selling, and the emissions of these purchases and sales are also captured. We call them as scope 3 emissions technically. So whatever emissions your value chain is doing, for example, if I am a plastic bottle manufacturer, right, and I am procuring some raw material from a value chain partner, right? So as a manufacturer, I would try to not only capture my emissions are my scope 1 emissions. I'll also try to capture my scope 2 emissions. Scope 2 is specific to energy. And I will also, in scope 3, I'll also capture the emissions which my raw material provider is also emitting. Because ultimately this plastic bottle is manufactured because of the raw material, services, all those things which I have procured eventually translates or formulates this bottle, which is now sold to the market. So the idea is to capture this. So I hope this is clear. We move down. Given the inclusion of PPP adjusted intensity ratios, how can companies ensure the comparability of their BRSR core metrics with those of companies in different geography locations? Sir, I'll show you a BRSR which captures PPP, and we'll try to compare it with some other peers if we have time. But PPP is actually the purchasing power parity, or this energy intensities or water intensities or waste intensities. Because of this PPP only we are able to compare it with global players. But maybe, when we have a live demonstration on screen, we will be in a better position to solve it. The next is, what methodologies or frameworks can auditor use to provide reasonable assurance on ESG disclosure? particularly regarding GHG emissions water footprint. As of now, we have two standards, SSAE 3000, which is for non-financial reporting, which is for BRSR reporting. For specific to GHG, yes, we have a standard SSAE 3410. This gives you a framework and a methodology to give a reasonable or a limited assurance on GHG emissions. So we are already in a standard, and we are coming up with one more standard, which is ED 5000. So in terms of this, I think I have covered all the questions. Keep on posting more questions. I would want it to be more interactive. In meantime, I am now coming on the key challenges which organizations are having in preparing this BRSR course. Now we move on the management, we move on the point 26, which is very important, which is assessment of material issue. I found a common mistake. A company is disclosing, again, a challenge. The company is disclosing their materiality matrix, which is in the annual report, or the materiality assessment process in the annual report, is different from the material issues which is identified here. Here, companies are only putting their high rated issues or only environmental related issues. I think we have to understand this is not only the report from environmental perspective. This is a report from social and governance perspective. If you think your customer relationship is a material issue, it is naturally aligned to UN SDG 16, and you will realize that maintaining relationships is also a United Nations Sustainability Development Goal. Please don't directly stick to the environment, climate related risk, or maybe GHG emissions or water positivity. These are material issues which appear to be direct, but I think first you have to align all material issues to those 17 goals. Then you have to align to the stakeholders for which these material issues have been identified. And based on that, the risk and opportunity needs to be mentioned. Common mistake, I think companies are only disclosing their highly rated material issues here. It is a wrong practice. Kindly put up all your material issues which you have identified. Also, my suggestion would be that whatever materiality assessment you guys are doing, please do it more holistically. So that is why I think adoption of materiality assessment day in the integrated reporting or from the integrated reporting would be a right strategy, and putting those material issues here is important. Your risk and opportunity should also come out from these material issues. And if you have any specific risk, right? So any material issue, say for example, if you are a solar panel manufacturing company, right? So climate change can be risk for all other sectors, but for your sector, it could be a risk as well as an opportunity. So make sure that if you are identifying a material issue, you are also identifying a risk and opportunity aligned to it. And this entirely depends on an industry. As I gave you an example of, a solar panel manufacturing company, a climate change is more of an opportunity for them. Even, a climate change is a global risk for everyone, but more of an opportunity for them. So it entirely depends on the sector also. This table clarifies that if you have identified any kind of a risk, then please tell the ways to adopt or mitigate, how the company is mitigating that risk. Another problem in this table 26, while we were looking at BRSR core, was once you identify a material issue, you have to also identify the financial impact because of this material issue. This financial impact, look at the format. It says that this could be indicative. This could indicate positive or negative. So if it is a positive financial impact, as I told you that, a climate change is an opportunity for a renewable company, can have a positive impact for positive financial impact of the company. The problem is that companies are not writing whether it is positive or negative. One, in terms of reporting, why it is positive and why it is negative, they are still not writing. The bigger problem is, to the extent possible, you have to quantify this financial impact, which no company is able to do. So this is a very critical table in general disclosure. This gives you the base of the entire BRSR report. The base is on the material issues which you have identified and the stakeholders you have identified, and how did you interlink those material issues and stakeholders to United Nations Sustainability Development Goals. With this, we finish section A. We move on section B. As I told you, section B is management and process disclosure. I think these are easy things. I would not want to go into too much of details of it, but majority of your governance related aspects are captured in section B. So all the policies which organization has, if these policies are converted into processes, what are the standards on which these processes are made? All these things you will realize that these are governance related issues, right? Specific commitment goals and set by the entity and the defined timelines is, I think this 5 and 6 point is what I was actually discussing, where companies are, giving very lofty targets. In energy, they are giving targets of, very quickly decarbonizing, or in waste and water, they are taking unrealistic targets. I think we have to really look into it. I see a lot of boards rolling back their targets in this year when they came to know that eventually all this data will be assured. I can tell you a live example. A board took a target of 25% female gender diversity, in which they said that we are taking a target of at least making that we have 25% of the board members to be a part, female board members. Eventually next year they realized that this is not what company aims at, and they were expected to roll back the targets. The point is, once you put up a target, next year you see assurance mandate coming up. I think all these things will, when we look in, synchronization, when we consolidatedly are looking these things, this will be important challenge. Please don't define all these things subjectively. The expectation is very objective. Companies writing long stories, qualitative disclosures, they are not considered to be great practices. Kindly specify what targets, and kindly specify in year 23, 24 or 24, 25, when you report for this BRSR, where do we stand? Last is the governance, leadership and oversight, right? And here also there's a change with BRSR core coming up. We see a lot of ESG committees also coming up. Earlier this was taken care by CSR committees. However, all these committees have a lot of role. I see 3-4 committees: one the stakeholder engagement committee, one the ESG committee, one the CSR committee, and your audit committees. All these 3-4 committees playing a very vital role in establishing these targets. We have 2 interesting questions coming, and we will take these questions right away. I'll just finish up with, I have 2-3 more questions. I'll just finish up this management and process disclosure and take these questions. I think this will, so anyways, all these committees have an important role. So it says details of highest authority responsible. I have seen names of chairmen coming up. I think it's important that, we have a structured framework of doing it. So maybe, your ESG committee or CSR committee should come here. When it is about, does the entity has a specified committee? Yes, you talk about this committee. How frequently this committee is meeting is also expected to be written. All these things finishes up with management and process disclosure. This is a relatively simpler thing to do. I don't think, you will have any challenge in filling this entire process. We then now move on principle-wise disclosure, but I am, more interested in there are some questions which has come to me. I'll take up these questions first. A very important question coming up. Key challenge it is. It says, how can company effectively document and disclose the percentage of input material sourced from MSME and small producers from India as mandated in Principle 8, Question 4 of the essential indicators, considering the complexities of supply chain verification and data integrity. I think you have put up such a valid question. You look at the top reports this year, right? 9 out of 10 have not been able to report this because they had 9 out of 10 have not been able to report this in a very accurate way because of 3 things. Last year, this question was whether you have sourced, if you recall, how much of the percentage of your raw material you have sourced from nearby districts. Now this question is changed, and the question says that now you have to source it from MSME and how much you have been able to source it within India. So the point here is, if your software, the ERP on which you are functioning, right, has to start categorizing these sources from not only from MSME point of view, but if you go down to this question, you also have to talk about trading houses from which you have sourced, purchases from trading houses, sales to the distributors and dealers. All these are very critical issues, and as of now, SEBI has not even defined what purchases are, or what sales is, or what trading house is. So my point here would be that to the extent possible, if you have to disclose this accurately, you have to do this tagging in the software. The problem is when we were approaching at the year end and when we were preparing these BRSR, then these companies realized that we have to disclose certain purchases which we have made from MSME, certain purchases which we have made from trading house, the geographies purchases which we have made within India. So all these things has to be driven by the ERPs in which you are functioning. The dealer needs to be tagged, the distributor needs to be tagged, the MSME needs to be tagged. And once you do that, I think the SAPs and ERPs have to give this output. As of now, MSME has been done fortunately because of rolling out of MSME app. So all these large companies had actually started categorizing all their companies have started categorizing their MSMEs into the software. I hope without this will be very difficult to manually capture. We go on the next question. So it says, Sir, Ministry of Defense and Railways, other than their listed commercial entities, are major contributors to greenhouse CO2 emission. What is the reporting system by which effect of operation of these organizations on environment and sustainability are captured and reported to Parliament monitoring authorities? Are they exempt from the BRSR requirement? I think yes, they're strong emitters. Sir, I think you put up a valid question. Yes, they are strong emitters. As of now, the BRSR mandates rolls out on the mandatory basis only, right? The SEBI regulation talks about the BRSR mandate, and this is not applicable directly to government departments unless you are a listed company. So if you are a Coal India, you are reporting it. If you are a GAIL, you are reporting it. If you are a Bharat Forge, you are reporting it, right? all these companies have to report it. But now we are expecting that, all these government departments also to report this. You have to have a voluntary system. This, at some point in time, ministry will start regulating. As of now, there is no formal regulation of it. So at some point in time, you will realize that ministry is formally regulating it, and they are expected to not only put up a BRSR report, because they are complex operations, more complex than a listed company. Maybe some voluntary ESG reports, just like, the Western world, we also put up these reports. So first, I think there has to be a voluntary system, and this system has to be slightly different from the BRSR system. So we don't have these reports as of now. We have more questions coming up before I move forward. So the question is how intercompany or intersector matrix on ESG is measured. So I think when you prepare a materiality matrix, right? Is there common matrix being evolved? No, I don't see any common matrix, even any sector specific matrix. This, and see, a material issue entirely depends on the geography we operate, right? And the conditions, the political factors, the social economic factors, and number of things. Somebody say I am sitting at Jaipur, I might have more water scarcity, water challenges than somebody who is not in a water scarce area. So even if we are both operating in same industry, so for me a water scarcity could be a material issue. But when it is about you who are into a water abundant area, prevention of or wastage of water will be some another material issue. So there cannot be any common materiality matrix. It, and even the products, the setups and everything is same. However, I'll be candidly answering this. When we prepare any material issues, when we prepare these material issues, we look into the peers, we look into the peer benchmark, and we actually identify first the sector specific issues, then the local level issues, and then we put these material issues to stakeholders. And when these stakeholders give their comments on these material issues, is then we start doing the prioritization. So my categorization of stakeholder might be different. So there cannot be, I don't see a genuine possibility of a common materiality matrix coming up. I move down. There's another question which says, kindly explain expert committee recommendation with respect to facilitating ease of doing BRSR, substituting the term assurance with assessment. The industry standard forum is in collaboration with SEBI will develop assessment standards. I think, sir, you have put up one of the finest question, and at SRSB also, the team is sitting here. We have been deliberating this for a long while, and the regulator has eventually proposed that maybe, we can look for a substitution of the word assurance from assessment. However, regulator, fails to look into 2-3 critical things. And when we discuss sustainability, there could be differences of opinion. But I think regulator fails to understand what assurance exactly is, right? When they replace it with assessment, assessments are more detailed. And in this BRSR, you see whether, whenever we are reporting for energy, whenever we are reporting for water, whenever we are reporting for waste, wherever we are reporting, especially in principle 6, right? You see at the bottom of each table, it has been asked whether any assurance assessment has been undertaken or not, or any evaluation or a third party evaluation. So as of now, regulator is looking at, maybe if all these at least data needs to be assessed by a third party instead of getting a assurance, would be more, regulator feel it would be more stringent. Why this problem comes, we have to look into it. I think the problem comes because lot of BRSR has been prepared by professionals who are really not aware about ESG. There is a lot of data asymmetry, and regulator feels that there is a lack of transparency in putting up this data to stakeholders. So regulator has actually come up with an assurance mandate, but whether it is the same assurance which they are talking about, or it would be individual level assessments, only assessments instead of assurance, it still needs to be decided. India does not have any assessment standard as of now. ISF, or if anybody comes up with it globally also, we don't see any assessment standards. We only see assurance standard, and we are hopeful that at least my evaluation is on select non-financial parameters, only assurance will prevail, right? Like a parameter pertaining to human resource, or a parameter pertaining to governance, or a parameter pertaining to gender diversity. But when it comes to CSR, that is why they're talking about social impact assessment. When it comes to environment, I think the assessment will also come into some picture. So as of now, all they have taken comments from the stakeholders and public at large, and I am very sure that there will be assessment standards only pertaining to energy, water, and waste, but this will not replace the mandatory or limited assurance in my eyes. So that's what my view is. But let's see what happens. As of now, we have an assurance mandate. As of now, the problem is that it is not only about assuring BRSR. You see a lot of companies giving assurance on select non-financial parameters, which you are printing it in your entire annual report. And what happens to that? And what happens to where companies have already started giving assurance, and you have already come up with a mandate to 150 companies? I don't think it will be rolled back or be replaced by assessment. Also, to match the global standards, globally people are doing limited assurance. We have come up with reasonable assurance. I don't see it a very logical step. The only logic which I see is the lack of transparency, data asynchronization, lot of non-professionals coming into the assurance. You see, conventionally, I have seen some, most name or novice companies taking assurance mandates, and the board of the directors and the stakeholders are also fine with these name and novice companies, and that is why regulator feels that maybe they should come out with a standard. They might also come out with, what exactly, who exactly can be an assurance provider in the country. That's something which only time can tell. Okay, I'll wait for more questions, but let's go on. Let's quickly go on principle-wise performances, right? In fact, rather than going on principle-wise performances, I would say, these are standard tables. I would now want to cover. So these are those 9 principles which we were discussing. I'll cover the critical ones, which covers the BRSR core itself. So I'll just, take you to what BRSR core actually is. Now you know what BRSR is. What are those 9 parameters? What does Annexure 2 has to, Annexure 1 and 2 has to, say about? So last 30 minutes, we now cover assurance, and we cover assurance on those 9 KPIs of BRSR core. I know, this is a very limited time span to deliberate, but still keep on putting up your question. Let's have more interaction. That's something which is in top of my mind. Just give me a minute. I have a presentation to share, quick presentation to share. Maybe, we can deliberate through it. I hope my screen is visible, right?
Yes, so yes.
Okay. So we move on, first the assurance, and with assurance, these 9 KPIs are also defined here, right? And then not, okay, wait. Is it open? Okay. 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 So we move ahead, right? So naturally, because as professionals, we are waiting as to what is happening with assurance. So as of now, I don't want to go into basics what assurance is. I'll quickly come into what's the difference between a reasonable assurance and a mandatory assurance. We have touched upon these points of, greenwashing, trust, credibility, incomplete disclosures, lack of qualitative disclosures. So, so India took a glide path as we were seeing in that SEBI circular, and that's how we are going up with a mandatory assurance thing. As of now, my suggestion to all corporates who have come here, I think before you come under the category of mandatory assurance, all these companies should start undertaking voluntary assurance. As of now, we are taking mandatory assurance only on those 9 KPIs, but there are more KPIs on which you can still take a voluntary limited assurance or a voluntary, even reasonable assurance if somebody is ready to give a reasonable assurance. In maximum case, you see these 9 KPIs these 9 KPIs being now assured by the regulator. I move forward. So as somebody put up a question. It was regarding what are the standards. So India is in a process of issuing a new fresh standard also, which is ED 5000. And when it is set up globally, I think India will take an adoption of it. As of now, yes, we have a standard on sustainability assurance engagement, which is SSI 3000, and on greenhouse gas statements, right, which is the standard is SSI 3410. What basically both these standards are, right? So these standards come from the international standards, which is the assurance engagement other than audits or review. So we took ISA 3000 and converged into SSI 3000, and similarly for 3410. As I told you, we are in process of developing a specific standard pertaining to ED 5000, which is international standard on sustainability assurance. These are two standards which will always come three standards which will always come when we talk about assuring. Important is this slide. What is reasonable assurance and what is limited assurance, right? So as limited says, it is limited to certain extent. So engagement in which the practitioner reduces engagement risk to a level that is acceptable in the circumstances, but where the risk is greater than for a reasonable assurance, right? So as it clearly suggests that India has taken a stronger mandate in which there the person you are assuring, the company you are assuring, has a lower level of risk in terms of disclosing their non-financial reporting parameters. So let's go more into detail of it, right? So in a reasonable assurance, you will see a positive assurance from the assurer. Limited is only confined to negative. Materiality is same, right? Understanding the subject matter and engagement circumstance is also same. The only idea is that limited assurance is more aimed to identify if there is a misstatement, and reasonable, even if there's a risk of a material misstatement, then also a reasonable assurance will solve the purpose. Naturally, reasonable has more extensive procedures, right? There's no doubt about it. Now, before undertaking an assurance, right, I think you have to do one important thing into this entire process, and that is why I said that regulator is not happy regarding the way India has been carrying out assurances, because majority of the assurance are carried out by people on standalone, no, on their own, and they will require some subject matter experts uh, to guide them. So before you undertake a assurance engagement, it is important that you onboard a subject matter expert. This is this is uh, very critical. Otherwise, tomorrow I'll tell you what is the future to this. When I look at these BRSR, when I look at these integrated reports, and when I look at this greenwashing directly on the faces of these annual reports and BRSR reports, if you are an assurance provider, so as of now you are not, governed by any law, but you're governed by the regulator that SEBI has asked you to follow this standard. This standard lays down certain guidelines. This standard talks about bringing the subject matter expert. So if there is a greenwashing, if there is a wrong way to give an assurance, and if data, once this data starts to be mined by the regulator, then you will realize that for every variation, the company is also penalized, and their auditors are also, or their assurer providers are also called for. That is why I am saying that if you are giving an assurance, please make sure that you have a system in place to incorporate both of these standards. So, so naturally, it's typically an assurance engagement, right? It talks about all those threats which we studied in our code of conduct, which is your self-interest, self-review, advocacy, similarity, and intimidation threat. So again, a common mistake. I have seen most of the companies taking an assurance, not most of the companies, but in certain companies, the assurers are preparers also, and they claim that we are doing a compliance of SSAE 3000. 3-4 cases has come to us in which the preparer and the assurance are same, or the affiliate company. ABC is the preparer, and ABC Consulting, they operate in a different name, is a assurer. I think these threats will then be evaluated, and it is as good as when you were doing a financial assurance engagement. It is as good as evaluating these threats, mitigating these threats, being extremely independent by giving a reasonable assurance on select non-financial parameters. So, so is this driven by our code of ethics? Yes, it is driven by our code of ethics, right? Like an international ethical standard board. I would straight away, because we're left with very limited time, in next 5-7 minutes, I'll straight away come to those 9 KPIs which we have been discussing from the beginning, right? So the first KPI, and I am very interested in its cross-referencing to the BRSR core framework. So our first KPI which needs to be assured for BRSR core is the GHG footprint, and this is now interlinked as question number 7 of principle 6. The entire BRSR will appear to be very simple, barring principle 2 and principle 6, and specifically principle 6 for we chartered accountants, wherein we are capturing a lot of data pertaining to energy, waste, and water. The greenhouse gases and their footprints, right? As of now, we are only capturing total scope 1 emissions, that is the emissions which as a company I am doing, and breaking up into various gases, right? Idea here is, and the assurance approach here is, that the absolute fossil fuel you are able to capture, right? The emission factor which you are able to capture, quantity of carbon capture, GHG emissions in CO2, your total scope 1 GHG emissions needs to come here, and needs to come here in alignment with principle 6, in alignment with question 7, and this will require and assurance, a reasonable assurance, right? Uh, Next is the GHG emissions, right? For scope 2, and it says that measured in accordance with greenhouse gas protocol. So if you are able to capture the scope 2 emissions, right, that also needs to be assured right here. We have some questions coming up before we take it forward, right? So we have 2, 3 more questions, and then I take it forward, right? So one question comes, I think, yes, the question says, kindly guide how the accuracy and reliability of data can be validated. As you said, many companies not putting quantitative data, they're putting it in a descriptive way, right? Uh, how the accuracy needs to be validated? Uh, let's look into when a company is not able to put a quantitative data, right? For example, it's a very valid question. For example, I'll tell you that when we were talking about purchases, from trading houses, right? I think maximum companies have put that disclosure quantitatively. You will agree to me, right? And there is a lack of, any clarity. People are even writing not applicable. So because they never had any systems in place, so the problem which has happened here is that they are not able to put that data. Accuracy can be only just with the uh, technology which these companies are using and the tools with which these companies are using, and how they are capturing and interlinking through their ERPs and software. The more manual calculation you see, I was doing a BRSR and I see that they have 20 electricity bills. They are punching down in an Excel. They are converting these uh, megawatt hours to kilojoules or joules, right? And then reporting it. Uh, the more manual intervention, I suspect that the system is really faulty there. So you have to be careful in looking at this, right? Also, if a leader, if you are reporting an essential indicator, you can't put up a qualitative information instead of putting up a quantitative information. You have to look into the backup documentation of almost every quantitative information you are putting up in a report, and all the conversion factors which has been used, all the assumptions which has been used. Yes, I agree that we were doing a BRSR in which we were capturing data for operational sites because we did not had any systems to capture data at non-operational sites. And because of this, in the director responsibility statement, we also accounted this fact that we are building up systems at non-operational sites. Also, wherever we were writing this data, we were making sure that we write it as to which plants we are actually capturing and putting up a footnote that these are the plants, the system is not in place. But we did not took a took a path where we were reporting also, where we were unable to report it completely. We put it as a part of director's responsibility statement also. For whatever we were reporting, we were having great documentations and backups, right? So eventually it's about how do you document all these information coming in BRSR, right? I think we've discussed this. What is the difference between reasonable assurance and limited assurance? There was this question. How should auditors address the challenge of verifying qualitative aspects like employee well-being initiatives, gender diversity efforts with the BRSR core? I think this is a very valid point. Before we move on this point, I want to just quickly complete this, and then I take all the questions in the last. because this will solve some answers. Similarly, for water also, we have the scope 1 and scope 2. Sorry, first we have to calculate the scope 1 and scope 2 emissions in energy and get them assured. In water also, we were calculating how much water is being discharged from, released back to surface level, to ground level, to sea water or third party. It also includes that water has been stored during the reporting period for use of discharge or subsequent reporting period. There's a clear approach which also needs to be assured. We go ahead with it, and then the water consumption intensity, the water discharge, all these things are expected to be assured. And in fact, as I told you, the conversion factors, you see the PPP coming up, which is the US dollar to INR. We move ahead to this, and we look into other parameters of energy footprint, right? And total energy consumption, total energy intensity, all these things needs to be, assured, including the waste, water. In waste, we have, all the 4 categorizations which were there in question 9 of principle 6: plastic waste, e-waste, biomedical waste, right? Construction and demolition, battery waste, radioactive waste, all these waste and the quantum of waste you are generating needs to be clearly assured. Now here comes your question, and that is why I moved here. Enhancing employees' well-being and safety. So now, as of now, they are asking you to assure on quantitative disclosure, on checking how much amount companies, because if you recall principle 3 question 1, we were bifurcating into daycare facility, we were bifurcating it into maternity, paternity benefits, and the insurance, accidental insurance. All these 4 parameters, if you quickly recall, this question number 1 needs to be validated. So you have to check in terms of percentage, the quantum of 1. All these, if company is saying they are giving 100% accidental insurance, then this needs to be checked by the premium which the company has paid, and on a sample basis, you might need to also check the policy. For daycare facility, maybe you have to check what policy companies have, and even you have to do plant visits to make sure that you are able to check the daycare facilities. Also, how, if what is the amount which has been billed. So all these things needs to be taken care. In gender diversity, again, we had one more question following this, that how did the gender diversity? The question says, how should auditor address the challenge of verifying qualitative aspects like employee well-being initiatives and gender diversity? So eventually, you have to look into the employee master and check the male and female employees. There are a couple of things which you have to check. The complaints which are pertaining to POSH, they need to be taken care very seriously. This is also a parameter on which an assurance needs to be given. As of now, the regulator says that the employee master and register is the key parameter on which an assurance needs to be given. Finally, you talk about diversity. You talk about the inclusive development. We had a question on MSME also, that how do we check the purchases? It says that it includes all procurement material, which is raw materials, spares, services, capex, procurement items. I told you through systems only, which through your ERPs only this can be captured. Then they are expecting you to assure the job creation in smaller towns, fairness in engaging customers and suppliers. And here you see, we discussed in our session the trading houses, the purchases from trading houses and everything, right? The number of trading houses, top 10 trading houses, sales, dealers, and including, most importantly, the RPTs, the purchases, sales, loans and advances and investments from RPTs. These are all the parameters which are fresh parameters on which an assurance needs to be given, which are a part of your BRSR core. I'll now take up the questions as we start ending this session. I know I have been very quick in the session. I would always love to, tell in more detail with more stories, but maybe we are having series of sessions. Today the idea was to break the ice of BRSR core. The idea was to why BRSR core is so important, because I think you have an assurance mandate following this BRSR core. But by the time we are putting up questions, I am here, and then the call of the day. So now next is, what role does technology play in enhancing accuracy and reliability of ESG data reported under BSG core? Are there specific tools or software solutions recommended? Uh, See, I am at institute platform, will not be appropriate to recommend any tool. Yes, there are a lot of tools, but understand one thing. It's a very interesting question. I see, companies, IT companies, still not able to understand what exactly these tools are. I see lot of IT companies making a BRSR in a HTML format and putting up, data into there. So the tool has to be that tool which has a conversion tool also, which can capture the input also, which can be bridged, or which can be collaborated with the ERP in which company is operating. Yes, there are tools, great tools coming up, at least to capture the energy, water, and waste data. But at an institute forum, I will not go, talking about any specific tool, but you may find it, right? There are. So unless you unless you integrate this BRSR with technology, I am telling you, you will not be able to even do one BRSR in an entire reporting season. If you intend to prepare 10, 15, 20, 50 BRSR or assure them, you will require audit tools, and you will require preparers tool from that side. What are the anticipated future amendments addition to BRSR core framework? We have the SRSB secretariat here. I think the first change we see is how do we integrate it with S1 and S2. The second change, which is already proposed in ease of doing BRSR, we discussed, how much value chain partners to be included, whether assurance assessments needs to be done as thoroughly, how thoroughly we can do that, right? Uh, so there's an amendment pertaining to buying of green credits. So all these 3-4 changes we see in a very near term. But as world starts evolving, this framework starts evolving, S1 and S2 taking over, I think you will see a lot of changes pertaining to governance. As of now, the governance is our weaker section. In BRSR, we are still not giving a clear statement of director responsibility the way the Western world is able to give. Directors are still not made accountable. So you will see some regulatory penalties also coming up. We have next is how should company prepare for potential regulatory change beyond the current line, especially considering broader adoption across listed entities. I think one terminology I started in beginning, which was SRMM. The first step all the companies should start taking, whether they are small companies, big companies. If you are a value chain to a bigger company, I think then also you have to go on sustainability reporting maturity model. The first report before you prepare a BRSR is your SRMM, and this could be voluntary also, and this can be forced also. If you are a supplier to a bigger player, there could be a case that the person to whom you are supplying might ask you to get a SRMM done and check whether his value chain partner is mature enough or not. This is not a mandate for 150, 500, 1000 companies. This is a mandate for India. And that is why in the very first year only, we see the assessment of value chain partners being taken up. The more value chain partners are being assessed and taken up, this is clear that this will be rolled out throughout the country. To prepare, I said, start doing SRMM, prepare voluntary ESG reports, publish these ESG reports, get your ESG ratings done. Once after you feel that your maturity is more than 70, 75 marks, then you can start going ahead with ESG ratings, and then you build up those processes. I am again repeating, this is not only for smaller players, but this is also there for not there for bigger players, but this is there for the smaller players also. Last question I'm taking for the day. Last question for the day. How can companies effectively document and disclose the percentage? I think we have already discussed it. I'll very fastly wind up. I have been asked to stop also. So thank you so much. First the event enablers, Krati and Harsheen, it's great to find people coming from, tier 2, tier 3 cities and putting up, uh, putting up their word of mouth. And naturally, when um, this would be like my, more than 500, 600 sessions across various boards. But I started as an event enabler only in my life. And this is a journey which you have to undertake. And still, the sustainability board, if has to make me a moderator, I am very happy to be a moderator. As a moderator, would always want you to be more interactive and more into the session, will be much more help and will give you a lot of confidence also in times to come, that when you start deliberating on your own. So I was a BRSR moderator only last year. This year only I got promoted to speaker because of SRSB board. So thank you so much, everyone. Thank you for joining. I know there are a lot of questions. You can put up those questions on LinkedIn, email, Chindu, all the SRSB will try to answer it. But it was wonderful interacting with you, having so many questions there, and hopefully, India comes out. India stands tall. It does not act as an obstruction of India to grow and develop. And we as professionals need to make sure that we adopt it in a very balanced and fair way. Thank you, everyone.
Welcome you, sir. Thank you, sir, for your insightful presentation, and your expertise and practical knowledge have provided us with a clearer understanding of the complexities of BRSR. We appreciate your dedication to fostering professional growth and your contribution to the field. Your eloquence and clarity made complex ideas accessible and engaging. And also, to revisit today's discussion or catch up on previous sessions, we encourage all the participants to visit the ICI TV channel of SRSB Board. And now I would like to invite Asheen ma'am to give vote of thanks.
Thank you. So, dear speakers, guests, and everyone present here, CA Sri Priya Kumarji, Chairperson, SRSB ICI, CA Dr. Anuj Goyalji, Vice Chairman, SRSB, CA Ankit Maheshwari Speaker of the day, Event Enablers, CA Krati Mittal, my dear colleague from Haldwani. I want to thank everyone who helped making this webinar, Mastering BRSR Core, Key Insights for Sustainable Practices, a success. First, a big thanks to our speaker for sharing their knowledge and expertise on the BRSR Core framework. Your passion for sustainability has enriched our discussions and inspired us all to take actions towards a more sustainable future. I also want to thank all of you who participated by asking questions and sharing your thoughts. Your active involvement made our conversations lively, meaningful, and full of valuable insights. A special shout out to the organizing team and support staff for their hard work behind the scenes. Your dedications made this webinar possible. Lastly, I want to personally thank the chairperson and vice chairman of the committee for their leadership in putting this insightful webinar together. Let's all keep the valuable lessons we have learned today in mind as we strive towards a more sustainable and equitable future. Together, we can make a real difference. That's true. Thank you, all of you, for being so patient and making this insightful discussion so youthful, lively. Thank you. Have a great day.
Thank you, ma'am. And thank you all participants. And Asvi. Thank you.
Thank you.